Good morning, everyone. My name is Mark Strippi. I'm the president of the Ahola Corporation. I want to thank you so much for taking time today to spend 10 minutes. So I'm not going to talk too long. We need to get to the meat of the presentation. But welcome to this edition of our 10-Minute Tuesday here at Ahola. Today we've got a topic that continues to be of huge importance to business owners of all size, and that's the employee retention tax credit. It's not too late to apply, to take a look as to whether or not these funds are available to your firm. We've got two great panelists today, Amy Poole and Ann Bahr. We've got an extensive amount of experience in helping our clients walk through the process of seeing if they're eligible and helping them apply. So hopefully you'll get a few good tips, good ideas from the panelists today. As virtue of we only have 10 minutes, now we have 8 because I'm talking too long. We're not going to be able to take questions live, but please go ahead and enter your question into the chat at the bottom of the screen. And within the next day or so, we'll get all those questions compiled and answers and send them out to all the attendees on the webinar today. So again, thank you so much for spending time with us this morning. And we look forward to helping you learn a little bit more about the employee retention tax credits. So Amy, I'll turn it over to you.
All right, thanks, Mark. For those of you who may not know Ahola, we are a family-owned payroll and HR services provider headquartered in Brecksville, Ohio, with over 50 years of payroll, tax, and HR experience, having served over 10,000 small businesses nationwide, offering a full range of payroll and HR services and software. Before we begin, I'd like to remind you that we are not attorneys or financial advisors. This session is intended for educational and informational purposes only. We do hope that you find these presentations helpful and informative, but the information presented today should not in any way be construed as legal advice. As always, if you have questions about how this information may affect your business specifically, we recommend that you consult with your financial or business advisor. Now I'll turn it over to Ann to start the presentation.
Thank you, Amy. It's great to be here today to talk a little about the Employee Retention Tax Credit, or ERTC. I've learned a lot about the ERTC from working with clients over the last 2 years, and we at Ahola decided that it's a good time to present this topic because we've spoken to many of our clients who either are not aware of the Employee Retention Credit or who don't really totally understand how impactful it can be. The ERTC is a huge benefit that businesses should not ignore. Let's begin with today's agenda. First, I will give an overview of the ERTC. Then I will go over the comparisons of differences in the rules for 2020 and 2021. Next, I will reveal the true answers to some common misconceptions about the retention credit. And finally, I will give you our best practices for claiming the retention credit. So exactly what is the Employee Retention Credit? The ERTC is part of the federal stimulus plan where businesses can receive funding if they met certain conditions in 2020 or 2021. The purpose of the retention credit was to encourage businesses to continue paying employees during the COVID-19 pandemic. This was originally passed under the CARES Act in March of 2020, and then there were changes along the way with 3 other major pieces of legislation. The last one was the Infrastructure Investment and Jobs Act in 2021, which retroactively ended the ERTC for most businesses, effective with payrolls dated September 30th, 2021. Now, businesses that qualify for the retention credit can obtain the credits on their payroll quarterly tax return form 941. At this point in time, since it's past September 30th filing for that quarter, businesses need to file amended form 941X returns to apply for the credits. To give you an idea of how this will work, after processing the amended returns, the IRS will issue live refund checks to the employer for the credit amounts. The refunds are yours to spend any way you wish. There are no stipulations. It's really a refund to reimburse you for the wages you already paid to employees during the pandemic and to help boost your business now. Also, the ERTC differs from other programs in that all employers who are eligible and who apply will receive the refunds. It's different from, say, the PPP loans where there was a set amount of funds designated for that and that it ran out when they were done. In this case, I was on a webinar where the IRS stated that any business that is eligible and applies will receive the funds because it's really a refund of previous taxes that your business has paid. So how does a business qualify for the employee retention credit? Private sector employers and tax-exempt organizations can qualify for one of three reasons. The first reason is if the business experienced a suspension or shutdown because of a governmental order due to COVID. Now, this can be either a full or a partial suspension or shutdown, but be careful with this. There has to be an actual government order. For example, an order enforced by your city or state that limited such things like commerce, travel, or group meetings due to COVID. The IRS has clarified that the suspension must have affected more than a nominal portion of the business or had more than a nominal effect. Basically, this means that the suspension or shutdown must meet one of the 10% safe harbor tests. For example, the gross receipts from that portion of the business that was suspended must make up at least 10% of the employer's total gross receipts. Or the hours of service performed by the employees in the portion of business that was suspended must make up at least 10% of the employer's total employee service hours. Both of these tests are determined by comparing the quarter in question with the same quarter in 2019. To give you an idea, some examples of businesses meeting the suspension or shutdown reason could be dental practices, hair salons, or such that were forced to close for a period during COVID, or perhaps a grocery store that had to suspend operation of an in-house cafe, although the rest of the store remained open. The second reason a business may qualify for the ERTC is if it experienced a significant decline in gross receipts for the quarter in question as compared to the same quarter in 2019. I will go over what significant decline means in a second. But it's interesting to note that the decline in gross receipts does not have to be related to COVID. There are many businesses of all types that will qualify for the decline in gross receipts reason simply due to the slowdown of business during the pandemic. The third reason a business may qualify is if it does not meet either of the first two reasons, but it is classified as a recovery startup business according to the IRS definition. This means a business that started operations on or after February 15th, 2020, and that meets some other requirements regarding gross receipts. What is the time frame for the ERTC? For most businesses, the ERTC can be claimed on wages paid between March 13th, 2020 and September 30th, 2021. For businesses claiming the ERTC solely as a recovery startup business, then the credit may be claimed on wages paid between July 1st, 2020 and December 31st, 2021. Now, this is third and fourth quarter only of 2021. Now let's look at the key differences between 2020 and 2021 rules. When using the gross receipts test for 2020, a business qualifies if the gross receipts for any quarter were down 50% or more as compared to the same quarter in 2019. For 2020, the business qualifies if the gross receipts for any quarter were down 20% or more as compared to the same quarter in 2019. So just 20% down from 2019, there are tons of businesses that will fall under this category. When calculating the credits for 2020, the credit is 50% of up to $10,000 of wages paid to an employee between March 13th and December 31st. Then for 2021, the credit is 70% of up to $10,000 of wages paid to an employee per quarter in 2021. Then for both years, when you're looking at qualified wages, those are wages that are defined as subject to Medicare. So this means the maximum credit per employee in 2020 is $5,000, and the maximum credit per employee in 2021 is $21,000. For recovery startup businesses, their limit is a little bit different. The maximum total credit for all employees is $100,000 for the year 2021. Now I want to share some common misconceptions flying around about the ERTC. First one, true or false? My business does not qualify for the ERTC because we received a PPP loan or Paycheck Protection Program loan in 2020. This is false, although it did used to be true. When the ERTC was created, businesses that received a PPP loan were automatically disqualified from the ERTC. However, this was repealed by the Consolidated Appropriations Act, and businesses who receive PPP loans are now allowed to retroactively claim the ERTC. The only stipulation is that the payroll wages same payroll wages can't be used for both PPP forgiveness and the retention credit. Now, I found that many of our clients have said that it's easiest to determine the wages that they're using toward the PPP forgiveness first, and then use the remaining wages for the retention credit. True or false? It's too late to apply for the ERTC, or the deadline for filing an amended Form 941 for the ERTC was December 31st of 2021. I've heard clients make these statements many times since the end of December. These statements are absolutely false. There is plenty of time to apply for the ERTC. The deadline is the same as filing a normal amended Form 941, which is 3 years after the original return was filed or 2 years after the tax was paid, whichever is later. Per the IRS, all Form 941 returns for a calendar year are considered filed on April 15th of the following year if they were filed before that date. So this means you have until April 15th, 2024 to file an amended return for 2020, and until April 15th, 2025 to file an amended return for 2021. True or false? I only have 6 employees. It's not worth it for me to apply for the ERTC. False again. Even if you only have a small number of employees, the credit amount can be significant. In this example, if all 6 employees were eligible for the full credit, the business would receive $30,000 for 2020 and $126,000 for 2021. The more employees you paid, the greater the credit. We have seen many Ahola clients receive hundreds of thousands of dollars, even millions of dollars in credits. Here's some advice for the best practices for applying for the ERTC. Number 1, you need to work with both your payroll company and your CPA or accountant. Your CPA or accountant will be able to determine which quarters you are eligible and to calculate the credits. Your payroll company should be able to provide reports that you or your accountant can use to calculate the credits. Today, I covered just the basics of the ERTC, but there are other rules that have to be followed, which your CPA or accountant will be able to review for your situation. For example, payroll wages used for another type of credit or program can't also be used for the ERTC. That's no double dipping rule. Also, wages paid to owners or individuals related to owners can't be used for the ERTC. Once the credits are calculated, your payroll company will likely be able to file the Form 941X returns and respond to any IRS notices for you. One word of caution here, be careful to shop around to avoid steep fees. There are actual retention credit companies and other firms that contact employers directly and that can charge as much as 15% of the total credit. It's not necessary to pay such high fees. And I would suggest not signing with any company before checking with your CPA or payroll company to see if you can find lower fees. For example, Ahola is charging a reasonable flat fee per quarter rather than the percentage of the credit amount. Number 2, make sure that you keep detailed records to support your eligibility and how the credits were calculated. If you fall under the reason of a suspension or shutdown, you need to support what order you were falling under, what government authority issued the order, and the dates it was in effect. You should also keep spreadsheets to show your payroll wages and how the credits were calculated. The IRS has placed a 5-year statute of limitations on auditing the retention credit. So this is longer than other payroll returns, so be sure to keep your records for at least 5 years. Number 3, the credits you receive from the ERTC is reportable income on your business tax return. So you need to work with your CPA or accountant to amend the applicable business return to include the ERTC as taxable income. And finally, number 4, please be patient. The IRS only allows Form 941X returns to be filed on paper, and the IRS is inundated right now with amended returns for the ERTC and for other COVID tax amounts. So timing may improve as the IRS makes changes, but right now we're hearing that it's taking 7 months or more for the IRS to process the amended returns and to issue the refund checks. So what should you do next? Most importantly, contact your payroll provider and CPA or accountant. If you're an Ahola client, please send an email to covidsupport@ahola.com. Our COVID team can answer your questions, provide a referral to one of our CPA partners, and provide payroll reports that you will need. We can also file the Form 941X returns and respond to IRS inquiries. If you're not an Ahola client, feel free to contact us at covidsupport@ahola.com. We're happy to answer general questions about the ERTC. If you are interested in learning more about Ahola and our services, please check out our website at www.ahola.com. Thank you for joining us. I hope you will look into the ERTC and call your payroll provider and CPA or accountant to find out if you qualify. Remember, there's plenty of time left to apply for the credit, and the refund amounts can be substantial. This is something you definitely want to investigate so you don't miss the opportunity. Now back to Amy to wrap up the session.
All right, thank you so much, Anne, and thank you everybody for your time joining us today. This webinar has been recorded, and we will send a copy of the recorded webinar along with the answers to the Q&A. We'll also include the opportunity to book some time with Anne to review the ERTC in this recap email that we send out. So thanks again, and I hope you have a great day.